Okay, so welcome everyone. Thank you for being with us this morning. This video is being recorded, so you can see it on our YouTube channel that we will share with you. And of course, we will share the presentation and the link for the channel if you don't have it already. So I will share with you a quick video for the ones that we kind of like don't know about MBDA. So it won't take. Okay, so let's see.
Mexico Minority Business Development Agency Business Center, more commonly known as MBDA. For more than 5 decades nationwide, we have funded programs that deliver business development services to the nation's minority-owned businesses. You made it here, and you're ready for the next level, to dream bigger and to achieve more. We are where businesses come to grow. Through our national network of MBDA business centers, we provide customized business development services that help your company expand its customer base, enter new markets, and gain greater access to capital and contracting opportunities. Our expert consultants will help you build scale and capacity through a wide range of services, including looking for new opportunities for your business, loan packaging, alternative growth strategies, teaming arrangements, market research, export readiness assessment, and being a connector and advocate. As minority-owned firms continue to expand the U.S. economy, strengthen local communities, and support greater job creation, our center in New Mexico is here to help. We believe that strengthening opportunities for diverse businesses creates a prosperous future for all. We make it our business to help you cultivate your success.
So for everyone, for every minority businesses, please reach out to us if you need support. Can you hear that? Sorry for that if you hear that. So I will introduce you to Fran from SBDC.
Okay, thank you. Thank you, Sophia. Good afternoon, everyone. My name is Fran Fernandez, and I serve as the director of the Small Business Development Center at Central New Mexico Community College, the SBDC at CNM. Just want to share with you a little how my organization serves small business owners in our community. Our New Mexico Small Business Development Center program was founded in 1989, and we've been serving small business owners throughout the state for 34 years now. We have 18 small business development centers across New Mexico, and our highly skilled staff is comprised of 63 business professionals that have business management experience and business ownership expertise. We work through this cooperative agreement with Santa Fe Community College to provide business services to our small business clients in our community. My center's host institution is Central New Mexico Community College, CNM, and we serve our clients located in our service areas of Bernalillo and Sandoval counties. Our mission is to develop skilled entrepreneurs and strong businesses in our state. The Small Business Development Center at CNM provides a no to low cost training and counseling services to help our small business clients start their businesses, to grow their small businesses, and most importantly, to stay in business. Some of our services include our no cost confidential business counseling. We also provide technical startup assistance to help our small businesses to get started. And we work with existing businesses to help them to continue to grow and to thrive. We also provide business and marketing plan assistance. We can review available funding options. We help our clients access market and data and industry research information. We offer bilingual counseling and support services. And of course, we do provide our low to no cost business education workshops to help our clients become skilled entrepreneurs. So like I said, we encourage you to reach out to us if you need help with your small business, or if we can provide any help or additional assistance, resources to you, be happy to work with you. You can find us online at www.nmsbdc.org, as we are always happy and to serve you, our small business owners. Thank you. And next, I believe we have Amanda Davis, which is here today, and she's going to talk about QuickBooks and how to get started. And so take it away, Amanda.
Well, thank you, Fran. I'm going to go ahead and share my screen here, and we'll kind of jump in to just kind of give everybody an idea of how I work here. I'm a local bookkeeper, but I work virtually, so my clientele is nationwide. We work exclusively with QuickBooks Online. So I'm going to be kind of walking you through some of those things. But this is going to be really great if it's interactive. So if you have comments or questions, raise your hand. I would hope that I have a little help because I can't see everybody from my screen, or put your questions in the chat so that we can kind of get the most out of this for you. So can everybody see my screen? I think we're good.
Yes.
Yes.
Perfect, thank you. Okay, so there's a number of different plans here. The three that are shown right here are the basic ones, and this is kind of an introduction to QuickBooks. There's a more robust option called Advanced that's not on here. I don't think anybody on this call would need meet the needs for Advanced. Advanced is expensive and it's got a lot of features. So Simple Start's probably a really good place to start off with. Right now they're having 50% off for 3 months. You can see that after that it starts at $8.50 a month and it goes up to $17 after that. If you need more features, you can go to Essentials and then you can go to Plus. I'm working in the QuickBooks Test Drive account over here. And so this is not a real company. Clearly it's a sample company right here. And it's Craig's Design and Landscaping Service is the fake name of the company. And there's lots of things that we can do and come in here. I see that we have some information in the chat. Yep, put your Q&A in the chat. And so this is what it kind of looks like whenever you get started. There's a button that I don't know if anybody really uses this, but if you're logged into your QuickBooks account, you don't want people to see the dashboard, you can turn that privacy on and off. I don't know why you would need that, but it is an option. Typically, I kind of work with over here on the left-hand side is where all of your daily functions and activities would be. And if you need anything like behind the scenes, you can go into accountant settings, you can manage users, so that those kind of things are back here. So I'm just going to start in banking because banking is really where the meat and potatoes of your bookkeeping happens. So what QuickBooks does is it allows you to link your bank connections. So you would come in here and you would say link account, and we won't be able to finish this because we can't put real information, but to kind of show you what it looks like. Let's say you had you bank with Chase. Now I have to start a free trial in order to do that. But what you would do normally is you would pick the bank and then you would put in your login information for the bank, the credit card, PayPal, any money that you do, any financial institution that you guys do business with, you would connect it here. And what it does is it pulls the data in from your bank, your financial institution, from the bank, from your credit cards, all of that, so that all you have to do is come here down below and review it and make sure everything is filled in properly and then record transactions. You can see that there's a number of them that have been already matched. So if we come into this one, that it's a check, right? And it's the right amount, it's the right date, and you can even open this up and see the check if you want to double check that this is the right thing. QuickBooks has been a little slow, so you have to bear with it. So this is basically you saying you had recorded this check in QuickBooks, and then when the transaction came over from the bank, then it found it as a match. So I'm going to go and say that is a correct match, and I'm going to match it. Let's say I did that with all of these, and let's say they are perfect. In here, we're just going to go and say accept. And now we've accepted a number of transactions all at once. I like to call this kind of in batch. Then you can kind of come up here and see there's this A1 rental. And I don't know if we have this vendor. We do not. So we don't have this vendor. So I'm going to say we're going to add A1 rental as a vendor in our books. And if you want to add more details like their bank account and all of that kind of stuff, then you can put that in here. And so, whoops, I just clicked off of it. Rental. That's A1 rental. It looks kind of different, but you can see down here, and it says a backhoe rental. And so that would be the details that your bank provides. And so we can say equipment rental of the job expense. If you want to apply it to a customer, you can. If you want to put tags in, or if you want to put a memo, say, 20% off screaming deal, whatever. And then we're going to say add. And then the next time that happens, you can see that it said, well, the last time you had this vendor, right? You went ahead and you picked A1 rental and you picked the job expense. There's a question in here. This is not for the desktop version. This is QuickBooks Online. So the desktop version is not what we're going over here. This is the online version, and it's where you pay a monthly subscription. And basically, you can get access to it from a smartphone. You can get access to it from your computer browser, like I'm doing here. If you're looking for desktop, this is not the right class for you. I'm going to be honest with you that QuickBooks is moving away from having support for desktop. So that is something to consider if that's what you're looking into. Okay, so what I'm going to do here is I can just go ahead and click add, but I want to show you a tool. There's this little feature called create a rule here. So what we do with rules, we can say, every time this happens, you do the following. So you're basically giving QuickBooks the ability to go and do the work for you. So I'm going to say A1 rental is the name of the rule. And then I'm going to say that it happens in any bank account. And then we're going to say if it has the information from the bank. And then we're going to say it's an expense, record it to this equipment rental, record it to a payee. We can assign more fields, but I'm going to say save. And once we do that, that should go ahead and record that A1 transaction. The only one left is a deposit of money that came back, like the vendor refunded some of our money. Because that's money coming in, the rule only picked it up for money that's going out. So we'll have to go and put this in and say refund rental equipment. There we go. And so you can kind of see how things go. Now, when I normally do these types of classes, I have a 5-course QuickBooks Online training that I sell, where I work one-on-one with our clients, and we work in their QuickBooks, or they actually work in their QuickBooks. And so we go through a lot of these, and there's a lot of questions that come out of the bank feeds, because it's like, oh, I bought this and how do I do it? Or, hey, I used the wrong card and I bought a business thing, but I used my personal credit card. Or I accidentally did it the other way and I bought something from a personal and I put it on the business card, that kind of thing. So you can come in here. There's a lot of questions that will happen in here. Typically I spend, several hours in this section with our clients. If there's any questions about how to record any transactions, what different things mean, go ahead and pop them into the Q&A and we'll keep going. So you can see the rules here. The one rule that I put in here should be showing up right here. And so you can go in and edit the rules too. And so when I'm doing a lot of banking, I'll come in and I can sort this data any way I want. I'll typically sort it by description, and I will create rules for things like this Bessie Books, this insurance company, Chin's Gas. I would go in and create rules for all of these things and match everything I could match. And then that gets a number of transactions out the door right away. And then you only have to do the ones that you have to add in a new vendor, right? And you have to say, okay, what kind of transaction was this? Was it, a fixed asset? Was it a loan? Was it a grant? Was there, what happened in here? So once you get this down to 0, and typically the bank balance and the QuickBooks balance should be the same. The only reason there wouldn't be is if, let's say, you wrote checks and you recorded them in QuickBooks, but they haven't cleared the bank yet, right? Or you recorded a deposit and the deposit hasn't quite cleared. The deposits typically clear a lot faster if you're writing checks. I don't know too many people that write a lot of checks. Some customers do. But a lot of them are done more electronically. So what I tend to see is these kind of tend to match up. And so you see that we have a savings account, we have a MasterCard, you can add Stripe through an app connection or Square, I can't remember. And PayPal, you can connect just like a bank. You can connect Venmo in here. Anything you use to move money should be connected in QuickBooks. So we started talking about banking. Does this discussion assume the chart of account has already been set up? So the chart of accounts, when you set up your QuickBooks account, it'll issue you a standard chart of accounts. So yes, you would already have a chart of accounts, but for example, if there's something in here that you didn't have, let's say Lara's lamination, if I could spell it correctly, we'll go ahead and add that. Let's say we wanted a lamination expense and we don't have it. Just like we added the vendor, we can add this new chart of account if that's what we wanted to do. And when we are doing the chart of account here, we would say, okay, what kind of an account are we setting up? Is it a bank account, a fixed asset, credit card, that kind of stuff? So I'm going to call it cost of goods sold, because in Craig's landscaping, you would think that lamination would be part of job costs and your gross profit. So I'm going to come in and say it's supplies and materials, lamination expense, save and close. So now you have added a chart of account that didn't exist prior, and that amount will go to a separate chart of account, cost of goods sold account is what I did. So when, like I said, when you set your QuickBooks account up, it will ask you a number of questions. What industry are you in? What kind of legal structure have you set up? And go all of those different routes. And then it will create a basic level of chart of accounts. And we're going to go look at that.
Sorry to interrupt. We have one question, and it's about the chart accounts. Does this discussion assume that the chart of account has already been set up?
Right, and that's what I was addressing here. And the answer is yes.
Yeah.
Because QuickBooks will set you up a basic chart of accounts when you set up the company. Okay, and so from here, you let's say we have everything reconciled and we're very happy with all of the stuff. The next thing we're going to do is reconcile the bank accounts and the credit cards so that we make sure that what the bank shows is what we show. Looks like we have another question here. If you are currently using another accounting system software, are you able to import those into QuickBooks? If you're using desktop, it will convert it to online. If you're not using an Intuit product, you may have to, like, for example, your chart of accounts. I don't know that you can import them, but your customers, your vendors, you can go ahead and import them if you can get them into Excel. I don't know if they talk together, so you might be able to do it piecemeal. So the answer to the question is yes, you can import from other things, but it may look a little different if it's not an Intuit product. Okay, now how do we reconcile? Oh, another question. Love the interaction, guys. This is awesome. Should an update to the chart of accounts or rules, etc., occur at the beginning of the year, or is it anytime? Okay, sorry, I missed the first few minutes. No worries, Steve. Yes, you can update the chart of accounts and the rules throughout the period as you need them to. It's nice to have a good system set up with the chart of accounts and have the accounts that you need. So that might be a good beginning of the year project, or starting the account right. But from there, if you need additional chart of accounts, or if you need to edit them, make changes, that kind of stuff, that does happen typically throughout the year. Can you explain a split? Absolutely. I like that question. Let's go back into checking and we'll go find a transaction. We'll just go here. This book's by Bessie. Let's do the $75 one. Let's say these are not a good match. Let's say that we need to categorize this, and we need to break it out with a split. So what that means is, let's say you went to Costco and you purchased $300 of products at Costco. At Costco, you may have bought computer equipment, you may have bought janitorial supplies, you may have bought office supplies, you may have bought books or some other things or gifts for clients. So you have multiple categories of transactions, and you don't have, like, how do you put that in one category? The answer is you can split them out. So you click on split and you pick the category. So let's say part of this was advertising, and we can add more lines. And let's say part of this was office supplies. And let's say, if it'll pick it. There we go. And we'll just pick dues and subscriptions. And we'll say $10 went to advertising, $15 went to office, and then another 50 went to dues and subscriptions. So that's how you would break it out. And then you can put comments in here to identify. So maybe the advertising was flyer, you know, office expense was, let's say stationery. And let's say dues and subscriptions was like an online service that they offer. And so you can come in and really break all that out. At the end of the day, this needs to be zeros. And if you saw me walk through it, it'll tell you as you're adding or putting in numbers what the difference does become. And then we would just apply and accept. And while we're doing that, I'm going to look at our other question. Do you need to put in exact amounts for the amounts, or can you leave that blank? Yeah, the amounts make a big deal, right? Because we're trying to get your financial reports put together. So the numbers are a big important piece of that, because we need to know how much money you made. We need to know how much money you spent. We need to know how much money is in the bank. If we don't put those values in there, then the reports won't give you accurate information. So yeah, that is very, very important. Thank you for the question. Okay. So any other questions about the banking area before we move on to reconciling? All right. You can get to reconciling a number of different ways. There's like 3 different ways you can get there, frankly. I always come up to this cog, this gear icon, and say reconcile. But you can also come over here to accounting and you can go to reconcile. And I will show you the 3rd way. It's really exciting. We can go into the register and we can say reconcile right here. So there's a bunch of different ways. We have one more questions about categories. What category would gas be in? I get this kind of question when it comes to the chart of accounts and where does this go and how do you do that? Some clients for this particular question, gas, you could just have automobile expenses and everything for the automobile goes in that category. You can have it broken out by fuel and by repairs and maintenance and other things that maybe a lease payment or insurance, those kind of things. That really comes down to more of a management decision on how you need the information to be reported back to you versus like an income tax requirement. There's very few categories that are going to create a taxable event, not an event, but like a tax situation. So meals, you can only deduct 50% of meals. So those have to be in a category called meals or you won't be able to break it out, right? Entertainment is not deductible anymore after the Trump tax laws that went through. And so there's a number of things that will impact how it is taxed. The rest of it just has to be broken out in a reasonable manner. And the reasonable manner is really going to be up to management as to how you need to see it. Do you need to have your cell phone broken out into a separate cell phone category? Or do you need it? Do you want it in utilities and lumped all with your electric and gas and those kind of things? Or is it more of an office expense and you don't need it lumped out? So it kind of these kind of things, there's a lot of flexibility. And at the end of the day, it's going to come down to the manager, the owner, the operator, the decision on where is this information needed and how is it going to be useful to me. So I hopefully answered your question. I often see a credit card payment and it shows could apply to multiple records or multiple matches. Is that common? So that would mean that maybe, Steve, I'm thinking that you would have like the same dollar amount that you're paying every period. And so it's picking that up because it sees the multiple of the amounts. So sometimes I do see that happen. We have clients that have like retainers, like a small amount to like, if you want to get on my calendar, you have to pay me a little bit of money in order to book that spot because that's just kind of the process. But when you have like a bunch of $50 or $25 transactions, then QuickBooks is like, whoa, there's like 10 of these. Which one is it? That kind of thing. So yeah, I have run into that before. It can be common depending upon the type of transaction and what's going on in the file. Okay, going into reconciling. This will be not very exciting. People talk to me about reconciling all the time and they're like, look, I look up my stuff online, QuickBooks, the balance and the bank feeds and the regular balance, it's the same. Why do I need to reconcile? So I'm going to just stand on my little soapbox for just a moment and say, this is what's called in the accounting industry, it's called an internal control. That means you're actually looking at things and you're double checking. So just because everything is right in the bank and everything is right in QuickBooks doesn't mean you don't need to be going in and double checking and looking at it. I had a client who they had like a donation button on their website and a hacker or scammer person went in and processed like 1,000 $1 transactions. And I think it was a bot because it was like in an hour, like all of these transactions showed up. And if I was looking in and reconciling and I'm like, what is this? Well, those fake $1 deposits never came in. So it was more of an accounting mess than impactful to the client. However, the fees for the fake $1 deposits were very real. And the bank processed merchant fees against those deposits. This is the type of stuff you need to be in there and you need to be looking at it. And that's why. Reconciling and making sure that it goes to the bank shows that you're doing that. It's just part of that system. So I will get back off of my soapbox. Sometimes QuickBooks will pull your statements. There could be a little button here that says see statements, and you can actually go in and see the statements. Some banks do that with QuickBooks, some banks don't. So this one doesn't, which is not surprising. But let's say they have $7,000 in the bank at the end of the month. And I'm just going to say that was yesterday, let's say we have the statement and that's the amount. And what's going to happen is QuickBooks is going to try to walk you around. QuickBooks is a very user-friendly program, which is kind of a double-edged sword. It makes it very easy to get around and it makes it very easy to do things, put things in the wrong place. But then it's also very easy to kind of reconcile and fix it. So want more space, blah, 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 click here to hide the statement. So it's kind of like walking you around here and just, I don't know, giving you a tour. It's very exciting. Typically, if things come over from the bank, there's this little icon right here. So when you're in the banking screen and you're recording transactions, it'll put this little icon in as, hey, this came over from the bank, and QuickBooks will automatically have these little check boxes happening. So a lot of times what's very common is if you don't have a lot of complicated stuff and you've been keeping up on your books, then you're going to have all of these little check boxes done and the difference is going to be 0. The things that you want to pay attention to is that, is everything here? Like, is there anything missing? Is there any duplications or errors in dates, amounts, whatever? And then if there's anything that hasn't cleared the bank, like let's say we had all of this checked and I just basically checked everything, but I'm going to uncheck these two. It's very important to know why those haven't been paid. So is this $300 to Robertsons and Associates? Is this a physical check that you mailed to them and they just haven't cashed, and they will at some point. Why is that? If this payment was received for $175 and it was from November, and we're reconciling November of last year, frankly, and we're reconciling, something is wrong. It's either an error or a duplicate. And so, and that could cause you real life tax situations. If you're duplicating revenue and you're not taking care of it, you can be paying tax on revenue you never got just because, you know, you're not properly recording things in QuickBooks. Then you want to make sure that when your statement from the bank shows you the beginning and ending balance, those are correct. Make sure there's nothing inverted, that kind of stuff. The number of payments that left the bank, there's usually a summary total for that. And same thing for deposits. So you need to make sure that these numbers all tie to the totals on your bank, because if they don't, then you're going to have a problem. So one of the reasons this happens that I have seen, let's say a check bounced or a payment from your customer, it didn't go through. So it gets posted and then it gets removed immediately, like a check that bounced. You write a check and it hits and it reduces the amount, but then they bounce it and then the money goes back into the account, basically, if you will. And so sometimes people will see that in and out from the account and go, oh, it nets to zero and I don't have to record it. You need to record it. It's important that you see all of the things and that all of these things reconcile, because one of the ways people can steal money from you if you hand this over to somebody else and they're not doing this is they can say, oh, well, you know, I just did it this way and you know, there's this deposit, so I wrote myself a check and well, it netted to zero, so I didn't record it. And you're like, no, you know, you need to see those. So this is why looking at the detail and making sure everything in here checks out is a right thing. So that's what we would do. And if you need to save it for later, you can save the reconciliation and come back, or you can close without saving. It's really up to you. If you finish now with this kind of a difference, it's going to create like a reconciliation discrepancy expense account, and it's going to throw that $7,000 in there. And that's a made up number, and that's going to cause problems for you when it comes to time to taxes. And if you have bookkeepers or CPAs looking at it, they're going to be like, what is this? You should never have a reconciliation discrepancy. If you can't find 2 cents, you know, that may not be the end of the world, but it really should be a very, very, very small number. Most of the time, it should just never happen, frankly. It's because you haven't found where the discrepancy is and corrected it. So that's how you would reconcile. And you would reconcile everything. So if you have a checking account, a savings account, a credit card, and a PayPal account, you're reconciling 4 accounts every single month to the statements. You need to reconcile everything. Those are my soapboxes. Okay. Then, since we were kind of talking about the chart of accounts, it seems like a good idea to come into the chart of accounts. So under accounting, you can see chart of accounts. Boom. And so these are the chart of accounts. These little icons with the arrows means that they are connected to the bank. You can edit them. You can create account numbers if you want. You can make accounts inactive. Let's say we didn't want this prepaid expense account. We can make it inactive. Yes, make it inactive. If you need to reactivate it, you can go here and say include inactive accounts. And this prepaid expense, we can make active. Super easy. Now, QuickBooks gives you a limit based on what subscription level you're in as to how many chart of accounts you can use. So that's what this is. You're using 45 of 250 accounts. Once you hit 250 accounts, you aren't allowed any more unless you upgrade. So that's what that is. And that's why it might be important to kind of come in. So you can see that we have these kind of things. Truck, we have depreciation on the truck and the original cost. I wouldn't stack it like this. I would have depreciation not by asset type, but just accumulated depreciation. That's a whole other accounting topic. We have a lot of terms we could go over, but I don't think we have time for all of that today. You can see the credit cards connected. There's a Visa that's not connected, but they're also not using it. And you can come in and see the different payables. Now, there's some accounts that you can't make inactive. One of them is retained earnings. One of them is undeposited funds. And these uncategorized categories that drive me nuts. QuickBooks just makes you have them. You don't get charged out of your usage, but you also can't get rid of them. It's very exciting. We have another question. Are you going to go over sending invoices to clients? Yep, absolutely. We can totally do that. Are there any questions about the chart of accounts before maybe we run into accounts payable and accounts receivable? Okay, let's go into it. So over here on the sales side, we can go to customers. And so QuickBooks has a separate group or separate option for a merchant processor. So you can create an invoice in QuickBooks and you can send it as an email to your customers and they can pay it through the QuickBooks payment processor. Once you're set up with all of that, then everything kind of connects and there is a cost. I don't recall, but I think it's like 3% per charge. And if they're going to pay you with an ACH versus a credit card, that's like moving money between bank accounts. It costs less. And there's like a max fee on it. So a lot of people prefer the bank transfers. It's really going to be a decision up to you. So let's go into Amy's Bird Sanctuary here. And we have this invoice right here. If it will open, QuickBooks has been very slow. Okay, so there is an email address for this customer. So let's say we created all of these products and services that have the description. You put in the tax, you're using the right tax amount. You can say save and send right here. That's an option. And it will pop up a window that says, dear client, here's your invoice. Thank you for your payment. You can come in. Oh, and they applied a credit. So it looks like there was an existing credit that they applied to this account. And I'm going to say, don't show that again. And so this is the send email and it will come from QuickBooks. It will not come from you. That is very important for your customers and you to know. Sometimes it will end up in junk. People aren't looking for those if they're expecting it from your email address. So just know that that's what it's going to be. And then in here, you can edit whatever this looks like, and then you can send and close. So if you want to send that off, you can say send and close. Your email cannot send. You cannot send emails from a sample company. That's very exciting. Another thing that you can do is there's this down arrow. You can share the invoice link. You can send a reminder and a reminder will be like, hey, just so you know, we never got paid for this. Share the invoice link. You can go ahead and copy that link. And from your email account, you can email your customer from your email address that says, here is your invoice. That they might be paying attention to if it's coming from QuickBooks and they're not expecting it to come from QuickBooks, they may not pay you. So this little trick could probably help prevent some miscommunication there. Do credits auto apply? Is there a way to make it so it does not? There is up in account settings. I've found ways to get in trouble with having it auto fill in and do things for you, and it can make a mess. So I can see the value of not having it do that. I can't remember if it's sales. Content. Let's go to advanced categories. Automation, pre-fill with previous automatically apply credits. So this automation under advanced is what you would come in and do. And you can say, do not automatically apply credits, do not automatically apply bill payments, do not pre-fill forms. And so reason you would turn some of these off is, let's say you forgot to put in a payee for an expense, but you've already reconciled the account. And then you've got to go in, right? And or even if you haven't reconciled the account, but you're going to add a payee, it'll say, oh, I'll pre-fill. And that sounds really cool, because it's going to say, well, here's the category it goes to and blah, blah, blah. It also changes the amount to the amount from last time. So that could screw you up in terms of reconciliation and cause you some headaches. So I would caution you on the use of the pre-fill. It's really nice, but it can also get you in trouble. So this is where you would go in and make these adjustments. I'm going to say save. And while we're here, I might as well just show you, you can customize how your invoices look under sales. You can come in and you can actually add a new style. You can edit another one, an estimate, sales receipt. So let's do an invoice. You can come in here, you can put your logo in, you can use a template, you can change the colors, you can choose your font, all the kind of things, and you can add different content. And emails, you can kind of see what that full details and everything looks like. You can even change the message to your customers. That's all set up in here. And so let's say you had wholesale customers and retail customers. Let's say you did both, and your wholesale customers, you want their invoice to look different from your retail customers. That's why maybe you would have different types of invoices, or it could be for different types of things that you do and sell. So these are some things that you can come in and do. I'm going to exit without saving. And then see if there's anything else in here. I think we can edit the expenses as well. So you can see build expenses. I don't like build expenses. A lot of times it'll let you where you can say, okay, I paid for something. Let's put that in my invoice to my customer. I prefer to have those items show up in cost of goods sold and to manually put them into the invoices, just because the way the QuickBooks module works and uses this, it kind of creates negative amounts in sales, and I don't love that. And that's going to bite you in the butt when it comes to like gross receipts and things, because you're required to pay the gross receipts out on the full amount received, not less these expenses and stuff. So I think that there's some issues in there. And then another thing is that when you're done, this is what I'm spending a lot of time doing, is closing the books to say, okay, the books are ready to go to tax. And if you close the books here, you can turn that on. You can set a closing date. I'm picking, last calendar day of the year. And then I'm entering a password. And the importance of doing this is that you put a password in that's not the password you log into the program. It needs to be separate. And that way, if you go to change something that happened in a previous year, QuickBooks is going to go, whoa, you're changing something in a locked period. It's closed. Do you really want to do this? And then you got to go find a different password. And then it gives you time to think like, hey, should I be doing this? Because if I do this, and it changes my books, you may have to amend your tax return or go fix your QuickBooks later. So this is a nice tool that when you're completely done and ready to go, and your CPA or your tax preparer or however you do your income taxes are finished, then you can come in and say, okay, everything matches to the tax return and we are locking the books so nothing gets changed inadvertently. So that's something that I am doing with all of my clients. Well, most of them, frankly. Okay. So we've talked about banking, we've talked about sales, and we've talked about reconciling. There's a feature where you can attach things. So I'm going to go back into sales over here. And if we go back into Amy's, let's say you have a contract with your customer and you want to have a copy of that contract in here. You can come down when you edit it and you can actually add that as an attachment in QuickBooks. So you can have attachments for your customers, for your invoices, for your bills, when somebody sends you a bill and you have to pay them, for expenses, for checks, for deposits. You can actually attach receipts for all of these things. And there is a receipts functionality. I don't use it a lot because there's a lot of non-value added work there. And it's a lot of work. So that's where some of our customers use it, and some of our customers just keep their receipts digitally with like Google Docs or whatever. And so they have them for their records. But to attach every receipt for every expense and then match everything up, it's a lot. It's kind of cool when it's in there. So you can do that there. If you want to do it in the invoice, you can come into the invoice, and it's always down at the bottom. So you can come in and attach it. If you attach it to the invoice, you can send the attachment with the invoice. So if there were, I don't know, specs or maybe an approval of a project before you would send it off, and you would want to show the client that that has been processed, or if there's a purchase order, whatever they might need to see to pay you, you can attach it here and you can send it to them when you send the invoice. There's a number of other tools that you guys can use, and I'm going to kind of speed this up because I want to get to reports. Reports are very important. So you have these different buckets of things. So if you want to create an invoice, you can do it from this new button over here. You can receive a payment, you can create an estimate, a credit memo, sales receipt, refund, those kind of delayed charges and credits. Vendors, you can create an expense, a check, a bill, pay a bill, purchase order, vendor credit, credit card credit, print checks. You can actually print checks from here if you have the paper to print them on. The setup takes a little bit, but it's kind of worth your time. These are for employees. So if you're running employees, I don't love QuickBooks payroll, so I typically don't do this. But this you can do this if like you bill your customer out your time and not run payroll through here. You could just get the time reports in. That's an option. And then this other where you can do a bank deposit, you can transfer between accounts, you can create a journal entry. I highly recommend, if you're going to create a journal entry, to work with your accountant or your bookkeeper or your tax preparer, because if you're doing a journal entry, you need to be sure that you're doing it right. They can be very complicated, they can be very robust, and they can get you in a lot of trouble. And a lot of people like to do journal entries instead of like create an expense. They'll create a journal entry to record an expense. Use the expense function, it'll serve you better. There's statements, inventory, pay down credit card, that kind of thing. So all of those things are in here. And again, with vendors, you can add, if you have like their W-9s, you can put their W-9s in here. If you have a contract with them, you can put the contract in here. All kinds of different things. There's payroll and other things, but we are down to a small amount of time here. So I'm going to go to reports, and we're going to start looking at reports. Now, I'm not sure the makeup of the group and how sophisticated everybody is. So I'm just going to kind of go through this like you're hearing it for the first time. I apologize if you've already heard it, but sometimes a little refresher is nice. The balance sheet is basically your ownership in the company. There's an accounting equation called assets equals liabilities plus shareholders' equity. What that means is the total assets has to equal whatever the total liabilities plus the total equity is. So if we pull out my little calculator over here, you're going to see that total liabilities is 31,281.33 minus 9720.04, and that's this amount, 21,561.21,561. So when they call it a balance sheet, it's because it literally balances out. So that's kind of one little cool thing. And QuickBooks isn't really going to let you not be in balance, so that's not something you need to check on, but to have that knowledge is good. Assets are things that make you money, like your bank account. If you closed your business, you could pull money out of these things. You have fixed assets, you can sell them and you can get money out of them. If you have loans that are coming to you, if you have accounts receivable, people who owe you money, those kind of things. So anything, if you shut your business down today, you could actually pull cash out of the business with this stuff. Liabilities is the exact opposite. If you shut down your business today, this is what you have to pay out to close out your business. So that would be accounts payable, that would be your credit card, that would be your gross receipts tax, your income tax if applicable. That could be any loans. Let's say you took out the EIDL loan during the pandemic. If you have an EIDL loan, then that would be in here, and that's something that you would have to pay off at some point. Looks like we have a question. does assets include merchandise on hand? So if you have inventory that you sell, let's say you are a clothing retailer and you have clothes that you sell, then the merchandise that you sell, the actual clothes, would be a part of inventory, and that would be an asset on the books. So that's what this inventory asset is. So I think that answers that question that we have. And then assets is equity is basically what encompasses the rest. So that's the value of your ownership in the business at the end of the day. So that's what this all means. Do you have any other questions about the balance sheet before I move on to the profit and loss? Okay, I'm going to roll in. If you have a question, we'll address it. And so in here under reports, you can see that there are favorites and there's these little green stars. If you put a green star next to any of these reports, they're going to show up in your favorites. If you customize a report and you want to save it, it will save here. And then we'll show you the management reports once we get there. So I'm going to run a profit and loss. And so this gives you your profit or your loss. It shows you all of your revenue, your income for whatever period. It looks like we're doing this for the first quarter of January. And you can change this. You can go year to date. You can display columns by months, weeks, quarters, whatever you need. And that can give you trended financials. You can say, show me a previous year, a previous period, and it'll say, hey, this is what you did last time. This is what you did here, so on and so forth. So there's lots of customizations, and there's further customizations in here. And then you can get any report emailed to you. You can print it. You can export it to Excel or to PDF. And if you want to make changes in here, you can just click in here. You can change whatever that looks like. You can add notes at the bottom, edit titles, that kind of stuff. So there's a lot of flexibility in here. So this will show you your total income, then your total cost of goods sold. So that is your gross profit. And then you can look at all of your expenses and see, hey, what's going on. So, and remember the laminate expense that we put in? That shows right here, lamination expense. And you come in and you just kind of see, is there anything miscellaneous? Never leave a high balance of miscellaneous. As a matter of fact, get it anywhere else that you can. These are things, so this would need to be reclassified to like insurance expense. The Philip Masonry needs to be categorized to like a cost of goods sold. It should never live in miscellaneous expense. Same for uncategorized. If you have a category that has a balance in it and that category is called uncategorized, you need to do something with that, and you need to move it around. And so you can see all the different things and what you can do, meals and entertainment, so on and so forth. And you can actually just come in, and if you're like, wait, what is this? You can just click on it. Anything that has blue and underline, it'll show you. And so you can go in and see, oh, okay, here's a bill. And that's unusual. And, you know, you can come in and add an attachment. You can even split things out. Like, for example, if part of it is the rent, but part of it is maintenance, like you may have a maintenance fee or whatever, maybe you're reimbursing for utilities, that kind of stuff, you can break things out in here. And with the limited time we have left, I'm going to go back to the management reports. Now, these guys are the same reports you're looking at before, but they're pretty. So a lot of people like them. So let's do the company overview. And these you can put into Word or Excel, like you can go in and edit them, but it'll give you like a cover page. It will give you a table of contents, and then it will provide you right here, like, for example, the profit and loss and the balance sheet. So boom, you have kind of a suite of reports in a very nice package. And you can come down here, you can edit it, you can send them, you can export it as PDF, as a document. Oh, I misspoke, not Excel, PDF or a document, a Word document. You can duplicate them to make different ones, that kind of thing. Your sales performance. So this will show you another suite of reports with a cover page and table of contents. Your profit and loss. and then your AR aging report. And sales by customer summary. So you can kind of see what all this looks like. Expense performance. Same thing. And so this one, AP and the vendor summary report. Okay. So you can see how these might be useful. You can create reports like in customer reports. If you have a customer report in here, let's just get one while we're here. And we're gonna save customization, profit and loss custom. And you can create a group. So if you have different users, you can say, okay, this group, this goes to here, or these are sales reports versus payable reports, that kind of stuff, who you're going to share it with, and so on and so forth. So I'm just gonna, this is my favorite thing that QuickBooks does of all time. And they haven't fixed it in all these years I've been working with them. You can share it with everybody or nobody. It's so crazy. I'm going to share with all and save. Can't share this report because there's no other active user in this account. But when you do have it, it would go into that custom report thing and section right here, and then you can actually have it schedule so that it will email whomever you want, and it will just do it however frequent you want. That's a really cool feature. You think that we would use it a lot more with our clients. The downside is that when you set up QuickBooks to just email reports out, they're going to email the reports out whether you've done any work in the books or not. So if they're not right, they're still going to go out and get emailed. So to save us a lot of headache, we don't typically use that feature, but it's kind of cool if you need to get like a sales report every week to your sales manager. You don't have to go in and run it. It can just get ran, you know? And if there's something updated, you just need to have the expectation for the people receiving the reports that this information may not be completely up to date and current and completely accurate. This is just kind of a baseline for you guys to look at. So now we're reaching the top of the hour. I'm going to see if there are any other questions or anything else we need to do to finish up our training course. I'm not seeing any questions come through. All right, well, I hope you found this webinar useful. It is being recorded. Kim, you have raised your hand. Yes, I do have contact information. How can we give them contact information?
I can send that with including the link of the recording. So if they want to, you know, review it again at some point, I can include your contact information in there. And the good news, Amanda, for everyone is that, of course, we are giving away 5-hour packages with Amanda, one-on-one consulting services with her, and you can ask all the questions, you know, that you can have. And of course, we're giving this service for free. So if you are interested in getting the 5-hour package with Amanda, please reach out to me, reply to my email, the follow-up that I will send after the presentation, and just let me know if you're interested on that.
Excellent. I think those were all the questions. I think the hand raise went down.
Yeah, just all the thank yous, Amanda. Yeah. Thank you so much. It was great to have you here, and thank you everyone for the time that you invested. I think it's worth it. Yeah, so thank you, Fran. Thank you, Amanda.
Thank you.
And thank you, everyone. Have a great day.
Have a great day, everybody.
Thank you, Amanda. Great job.